All right, so it's rate setting season again, and the Central Bank of Nigeria, the monetary policy meeting kicks off next week, Monday. And the question now, will it be a hike, a hold? Don't think I should be mentioning a cut at this time. But let's find out more now on how it's going to impact markets and the economy. Let's talk to Patrick Jumidia, a head research, Sterling Asset Management and Trustees Limited, joining me right here in the studio. It's great to have you.
Same here too.
Yeah,
Good to
so
see you.
the season is upon us. Again, it's not about Christmas, even though we know Christmas is we don't know how the consumers are going to navigate. Another Christmas. It's quite interesting. We're almost getting used to these higher prices at this point. So it's another meeting. What are you seeing? It's the same issues before this MPC. Weak currency, higher inflation from the
prices.
PMS prices, gas prices, every price. I don't know if you can mention one price that's not gone up. I'm still looking for that one thing.
The price has not gone up.
Price. I don't know. I've not found it yet. But what are you expecting next?
Obviously, I don't think there is any. Yeah, because of course prices have changed, and because these prices have a way of interrelated with each other. So if there's an increase in one of the prices, it will obviously lead to an increase in every other prices like that. So, having said that, yes, we do not expect if we happen to see a rate cut by next week.
Wow, I'll be shocked.
That's not likely to happen. But what we're likely to see, a lot of people have come up to say, oh, the CBN is going to continue, the rate hike. And most people have said 20 by 0.25% again and some very few people are saying by 0.5%. Well, in my opinion, yes, I will not be surprised if I see that they increase it. But I'm thinking that having raised it by about 850 basis points between February till date, and if you look at what has happened in the treasury bill markets, the price NTB rate has gone up last time from about 19 to about 23 or 24. That's large. I've not seen that.
When I saw the FGN 2031 bond, that hit a new high.
You see,
that was on Monday.
Exactly.
Yeah.
So that value, those increments, is making me try to rethink, to say, oh, maybe government, because the essence of increasing those rates is to say that, okay, let's control our exchange rate, because they've come to identify that exchange rate is the key determinant of the inflation that Nigeria is facing. So let's stabilize the exchange rate. So if they are doing that, they are discouraging people from, their huge demand, particularly as we are in the fourth quarter of the year, where those demand for FX will be high. So if those rates has gone up, and if you look at the exchange rate from the last time government had the last time MPC meeting and now, compared to the previous time, it hasn't depreciated so much, because I'm sure they are going to be looking at the numbers. What has happened from the last time we had the meeting and now? What has happened? It hasn't depreciated so much. And again, if you also look at money supply too, the growth rate of money supply too. Yes, it has gone up, but by how much? And I'm very sure that those statistics will help them give some, inferences about what kind of decision that they will take. But again, they will also be considering the fact that we're entering December, and demand is likely going to go up. And if that goes up, and we don't have supply to increase, to back it up, prices are likely to go up again. So, having said all of this, in my opinion, I think it's likely to be a hold.
Likely to be a hold.
It's likely to be a hold.
We'll definitely watch out for that.
It's likely to be a hold.
Considering we're still seeing weakness, in the FX market at this point.
Because even though the naira has depreciated, but by how much? It's from the last time they had the meeting till 19th, I think it has depreciated by about 0.9%. If you look at from the previous meeting that they had, it depreciated by about 7.7%. So the question now is, what are they going to do? Because of course I know it has to be based on the numbers that they are seeing. It's not going to be subjective. So having said that, I feel that it's going to be a hold. And again, considering that the NCB rate has gone up and the bond rate too has also gone up. Right. So, and those can help to further stabilize the exchange rate. Don't also forget that government is doing a lot of things at the moment to also stabilize the exchange rate and all that. So if we put all of these efforts of the government together and we try to look at it vis-a-vis what is likely to happen to demand in December, of course, I see this these policies or these factors having superior effect on the demand that's going to happen in December. And as such, I feel that there's going to be a hold. Even though most people are saying that it's likely
Maybe
to
25 basis points.
25 basis points
Right.
or 50 basis points.
Because we're also seeing the likes of economies that have seen a deceleration, when it comes to inflation, and they're nearing most of their targets now. The Bank of England, they get to its target, get below that, but the latest result shows that
it's waking up
gone
again.
above that. So it almost seems most of the countries that have been cutting, at some point they may have to pivot at this point. So how do you see that playing into a country like Nigeria, where we've been raising and trying to find stability somehow, and we're expecting maybe a hold in the next meeting? What are you seeing in 2025 for most of the African economies when it comes to interest rates?
Yeah. In the Western world and in some emerging economies, you see them, they've been able to achieve their target, like you mentioned. Unfortunately, in Africa, we are still seriously struggling. And one of the reasons is because of, one, the type of goods that we produce, which is majorly primary, and the fact that we rely heavily on imported goods. Are these going to change next year? So if they don't change, then if whatever happened to this Western world, if inflation rebound again in those countries, they're likely to have the impact, because we are going to be importing either inputs or goods from those countries that we consume or we either use for additional production process. So if there's a rebound of inflation in those countries, then it will be difficult for us to say that we are going to be cutting rates in many African countries. So again, of course, because of the interrelationship between countries of the world, whatever happens to them is going to play a serious impact on not just Nigeria and every other African countries.
Right. And I was having a conversation with my colleague earlier. My colleague asked me, okay, since most African countries are struggling with US dollar inflows at this point and currency weakness, is it time to say, you know what, let's back the Naira with gold? And I said, we've seen this before. We've seen how the ZIG, has performed so far in Zimbabwe. It's not really encouraging.
Yeah, so I've had that conversation several times too. And for me, and that's why for someone like me, when I look at the African Continental Free Trade Agreement, I felt that would have been an opportunity for Africa as a nation to come out, to be able to increase whatever they produce, and then begin to have a voice in the global space. But unfortunately, if you look at the rate of trade between African countries since they've started the commencement of the African Continental Free Trade Agreement, I don't think it's been too significant. And so the only way to have a voice is to produce. It's not just by coincidence that they call these countries industrialized nations, because they are industrialized, they produce. And that's why we need to change our orientation in terms of what are we producing and our consumption pattern. Those are the ways that we can then begin to say, okay, truly, we can raise.
So even if we back the currency with gold at this time and we're still not producing,
that's
no
the
difference.
Issue. And we change our consumption pattern as well.
Okay, so I guess it's a combination, of many things at this point. All right, going into next week, are we expecting volatility, with the markets?
Yeah, the market has been volatile, and somehow some sectors appear to be doing well despite the hike that we've been seeing, And of course, like I've said in several discussions, is to say that the oil sector has been doing very well. Firms in that sector have been doing well.
Yeah, I saw the oil counter was up about 133%. That's the oil and gas index.
Yes, yes, fantastic. And I'm sure the reason is not surprising, because these people have the ability to shift the cost to the end users. And they make profits. As the price is going up, they are doing Thanksgiving. They are going to.
I remember at some point, last was it 2022? We're talking about windfall tax. For businesses enjoying
those kind of
most of those rising prices.
Maybe they did that for the banking. They did that for the banking, and if you saw what happened in the banking index too, at first it was negative beginning of the year, and suddenly because of the increased hike, they started benefiting from it. But the question is for how long? Because if the rate continues to go up, what will happen is that investors will be having increased defaults in some of the payment of this loan. and that will begin to affect them again, So, but for now, they are still celebrating. Some of the bank, in terms of their index, has been showing some fantastic results there.
Now, we know most of the tier one banks are still in that capital raising process with the rights issue, and about 2 banks are currently having a rights issue program right now. But, looking forward at this point, what are you seeing that will be that catalyst? Or do you think the NGX, fine, year to date about over 30%, increase for the all-share index year to date. Are you seeing that continuing into 2025? That's for the NGX.
Yeah, this is December once again, and of course, the end of the year effect will always have impact on the market. And again, like I've also said in some of my interviews, it also depends on people's ability to take risk, and look at the return that they will get from their risk, and the sentiment of investors basically, and what they see, how they can interpret what is happening in the economy. So those will have a serious role to play. Well, even if the NGS will go up at this time, it may not go up too significantly because the year is already coming to an end. But maybe something around the 30 between, if we put a band on it, maybe between 30, 35 year to date to end the year, and that would be fine.
Maybe about 35%. All right, we've been seeing some, a couple of company results, third quarter, 9 months, results so far. I'm looking between the tea leaves there. What are they telling you? When it comes to operating in a high interest rate environment, how do you think most of these companies are navigating, raising funds?
Well, I'm not saying it's going to be easy for many of them, but somehow they've been able to do that. If you look at the banking sector, and that's why they are doing well. If they put up their rights issues, people want to patronize them, because at some point people felt that, the banking sector, are they likely to survive the recapitalization process and all that, and that led to people leaving that sector. But again, when people saw that, I think with this recapitalization, the banking sector is going to come out strong, and it's important to buy their stock at a relatively cheap price now, because as they are selling, because of the capitalization, the price is now relatively cheaper. So if you don't buy now, by next year, the price of this share might go up. So let me quickly go and rush to buy. And then that led to some increased performance.
So I guess it's formal at this point.
So these issues, I don't think it's easy for some of them to raise the capital, but somehow they've been able to do it, except those in the consumer goods sector, those in the industrial goods sector, those ones might be struggling. And some of them somehow, because of if you check what happened to MTN recently when they brought out their commercial papers, people still had an oversubscription, so to say. People still wanted to buy. So somehow there's still trust, there's still this confidence of investors in some of these companies, and they are still raising capital.
All right, we'll keep watching. Yeah, 2025 is not far off. At this point, it's partially upon us. But thank you so much, Dr. Patrick Jumede, as the head research, Sterling Asset Management and Trustees Limited. Thank you for coming.
Thank you so much. Good to see you.